Welcome back to Vantage. Want to understand what the likes of Elon Musk, Richard Branson, Jeff Bezos are doing in space, why they're interested in that area? My next guest provides some insights. He's been investing in the space sector for a long time. Fascinating to hear where he's deploying capital. Let's go take a look. Welcome back to Vantage. We've got something slightly different for you this time, and very timely. My guest company announced a first 100 investments in the space sector. It's a really interesting sector. Welcome, Mark Boggett, Chief Executive of Seraphim. Before we get into it, maybe introduce yourself and in particular explain the journey that led you to become a pioneer in space tech investment.
Absolutely. So, well, first of all, I started off as a big fan of everything to do with space. So it's something I've always been naturally interested in. And I've also been very interested in the career of Elon Musk as he's been developing SpaceX, and I've really been fascinated in watching the development of that. So I'm a career venture capitalist. So I spent my entire career looking into the future, trying to identify technologies that were going to create big market opportunities. And I've always been a generalist technology investor. So investing across a whole range of areas, from artificial intelligence, new materials, telecommunications, the Internet of Things. And I was working at another venture fund who were transitioning more towards private equity. So they were looking for more stable, profitable businesses, where I was continuing to look for exciting technology growth opportunities. And decided as a consequence of that I would leave and set up my own firm to do something really exciting, and decided that space was the market.
Yeah.
What I decided to do at that point was really to go and see what the UK Space Agency had to do about it. I went in to meet the CEO there, and he said to me, the timing is absolutely perfect because there's this huge convergence of technologies that's going on from all the other sectors into the space market. So on the back of that, I got introduced to a whole range of the world's largest space companies through the UK Space Agency. And I went along and met the CEOs of 11 space companies. These are big multinational space businesses. And again, I told them what I was looking to do, to create an investment fund that was going to invest into the technologies that were going to disrupt their market. And more than half of them agreed with me and invested into my first fund. So, which was the world's first ever space-focused venture fund.
Let's understand your current role at Seraphim, and in a nutshell, what Seraphim Space Investment Trust is trying to do.
So we listed Seraphim Space Investment Trust in 2021 because we recognised that there is a growing need in the market for growth stage investment into the global space tech market. So previously we'd been really focused on early stage, seed and Series A, but these companies scale, and they scale significantly, requiring significant amounts of capital. And there really wasn't any specialist providers of capital in the market, in the space market. So we decided to launch the fund to be that provider, so that we can invest in the B rounds, the C rounds, the D rounds of these businesses as they scale.
So, and I guess we want to sort of debunk some myths. If you read the headlines, you could think that actually space tech is the entertainment for the billionaires, but you see some much more sort of wider sort of commercial opportunities, particularly with respect to global security and climate change. Talk us through the attractions of the space industry and the growth drivers of the space industry.
Yeah, okay, well that takes us back to those billionaires, because each of them, in their own way, were looking to open up the space market for commercialisation, recognising that the need, in order to be able to do that, you had to produce a more reliable rocket that could get to space cheaper and more frequently.
Yeah.
So historically, the way that rockets worked was that they got thrown away and disposed of, each on single use. And really what Elon Musk has brought to the market is a reusable rocket.
Yeah.
And what that's done is it's created an environment where the price has come down significantly of sending a kilo into space. So previously, it's 100x cheaper than it previously was.
Yeah.
But at the same time, the cadence of launch has increased dramatically, and that's nearly 100x what it was over a few years ago. So this creation of this new access to space at low cost has really opened up a huge market opportunity for companies that want to try and use space. So at the same time, there's been a revolution in the satellite industry. So entrepreneurs have been taking components from adjacent sectors, they've been pulling them together to create new capable satellites. These satellites are smaller, lighter, cheaper than the traditional satellites. And when you bring these two things together, you can launch large constellations of satellites.
Yeah.
So hundreds or even thousands of satellites. And really, this is what's brought me into the market, because what these satellites are ultimately doing is that they are gathering information about our planet. So they're communicating with the planet, or they're gathering data about the planet in low cost, high resolution, and close to real time. And that's a game changer, because this digital infrastructure that is being created allows us to monitor everything that's going on the Earth in real time. And once we've got that data, by applying algorithms, we can get insights, how we can use resources more efficiently. We can also identify what bad actors are doing. So those that are chopping down rainforests, those that are dumping effluent into the sea or rivers, or those that are committing war crimes around the world. They will be held to account, because it's now possible to do so from this new digital infrastructure. So you talked about defence, you talked about climate. Mm-hmm. Those are the two real drivers that are really driving the space market at the moment. So defence market is booming at the moment. So because of Ukraine and everything that's going on with China, there is been a huge increase in budgets for defence around the world. They're at record levels, and these defence organisations around the world are now deploying that capital, and really at the top of their list of priorities of what they're seeking to do is enjoying this greater understanding from space. So there is a very significant amount of tailwinds that are really driving the space sector at the moment. And then on the other side is climate and sustainability. So being able to monitor everything that's going on the planet, and being able to identify what's going on for example, in climate-induced extreme weather events, supporting the insurance company that's being crippled by this changing environment and their policies in relation to that. So being able to understand that better, being able to predict that better, being able to take costs out of the process for when they're evaluating claims, and this is really what the space market is already enabling. So these are the sort of two areas that are rapidly growing at the moment, despite where we are in this macroeconomic backdrop.
Yeah, so and I'm going to follow that up just for me as a layman to understand that a little bit better, and taking in simple terms, space allows you to do something that you were doing, on the ground, in a better way or in a more cost-effective way, for instance. So the idea being that if you're monitoring fishing rights in a territory, rather than having a fleet of 30 or 40 boats, you can use good data coming out of space, etc., to monitor that at a lower cost, hopefully.
Far lower cost, yeah.
Yeah, and then you might need one or two vessels on the ground to police them when you see there's an alert coming up here, we need to go to this particular
Absolutely.
area.
Let me give you an actual example of that working in practice. One of my portfolio companies, Hawkeye 360. Mm-hmm. So it's the world's largest radio frequency signals intelligence business.
Yep.
They've got a huge constellation of satellites in space, and they're focused on illegal fishing.
Yeah.
So when a boat's about to go illegal fishing, it's parked on the edge of prohibited waters. They switch off their AIS beacon, which is the beacon that all boats have to avoid colliding with each other in bad weather. They go and do their illegal fishing, and then they come back to the point where they started and they switch their beacon back on. Now what happens now is that when they switch that beacon off, there's automatically a message that's sent to Hawkeye 360. They then start to auto-record everything that's going on in that area to identify what that dark ship is doing. Yeah. And through the signals that dark ship then throws off, they're able to identify the fact that it's going in a process for fishing, and then use that, and they have actually used this for holding those boat owners to account, so that this could hopefully eradicate illegal fishing and other illegal activities on the ocean.
Okay, interesting. And there's a range of different sort of ways of investing in it. So you've got the satellite constellation, the data platforms, providers of space services. When you're looking at this sort of spectrum of subsectors, what stands out for you as potentially some of the most attractive right now?
The areas that we're interested in. So predominantly we're still investing into constellations. So because there are so many different ways of using these constellations and the data set. We like the constellation play because these are companies that actually own the data set. So that means that whilst they are providing the data to the end customer, they can be differentiated over the longer term. They can also build up large intellectual property portfolios so that they can build a moat around their business. So they can be sustainable in their position for a long time. And they're vertically integrated right the way down to the customer and providing the services that are heavily reliant upon artificial intelligence to provide insights to the end customer in a software platform. So most of these companies actually see themselves as a software SaaS type business, or the world sees them as a space business. So that's really the first area that we're focused on, because this is just a giant opportunity. There are investment banks out there that have measured this opportunity, measured in trillions of dollars. And there's huge advantages to investing into the first companies that put up the first satellites. The space is really very difficult. They make mistakes, but they patent around those mistakes, so make it harder for those that come behind them. They then get the first customers, they understand what the customers require, and then adjust their offering. So that's the first place that we're looking at, and there's years still to go on that. The other area that we like is called downlink. So this is really about getting the data back down from the satellite, down to the ground, as quickly as possible, but in a cyber secure manner. So if you look back at the last 5 years, the total investment that's been invested into the SpaceTech domain, the area that's had the least amount of investment is actually the downlink. Most of the investment's gone into launch, and then it's gone into constellations, and naturally the next part is about getting the data down. So we've been investing in that area for quite some time, where it's really been sort of against what the rest of the market is doing. So we've built up some great companies in that particular area. The other area that we invested into, the third area that we've been focused on for a number of years, which is now starting to pay dividends, is around debris in space. So we recognised when we set up our first fund that we're actually part of the problem. Because we're financing these large constellations, and the new satellites, they operate for sort of 3 to 5 years, and then they're dead, and ultimately they become space junk. And as all these hundreds and thousands of satellites are launched, if they're not removed, that creates a big future problem for the commercialisation of space. So from the get-go, we've been trying to identify companies that will help mitigate and resolve this. We've also recognised that regulation was eventually going to come in and require operators to act in a particular way. So we've been really selectively investing into the companies that we think will be the emerging leaders in this area. And then during the course of the last 6 months, the regulation has actually changed. Now that it used to be, this is the FCC regulation in the US, what they used to allow, if you're a satellite operator, you had 25 years to remove your satellite after it reached the end of its economic life. And the reason why they chose this 25 years is because at the average sort of location that most satellites were based, the gravitational pull of the Earth would actually pull the satellite down towards the Earth, and it would break up in the Earth's atmosphere after about a 25-year period. So it was set at that figure for those reasons. But now we're going through a stage where we're really populating space in the way that I've described. It's now necessary to change that. So they've just introduced a new time period, which is 5 years. So that now means that at the end of the economic life of a satellite, you've got 5 years to remove it. Or if a satellite breaks down immediately, you've got 5 years from that date to remove it. So the obligation is now on the operator to be able to remove that satellite. So we've been investing into companies that from Earth look up into space and monitor all of the debris in the satellites. We've been investing into companies that actually remove satellites. So they'll go and grab a broken satellite, they'll tow it to the edge of the atmosphere, push it to the atmosphere so that it burns up, and then go back for their next job. So we consider that like the RAC or the AA of space. And then we've also invested into the Quick Fit of space, which is a company that will be contracted when a large $1 billion satellite is no longer operational. They will go and attach to that satellite in order to provide it with additional capability, more power, the ability to be able to move, so that they can extend the life of these very expensive satellites. So those are the sort of 3 areas that we've really been focused on in recent years and continue to be focused on.
So what stood out in that was this idea of the first mover advantage. being early. And I guess what I wanted to understand was how you source the nimble emerging space tech winners, for instance, the ones that go through your accelerator program.
Okay. So because we were the first venture fund globally to focus on space, we've always received a giant global deal flow.
Yeah.
So, as we've built out the organisation over the years, that deal flow has grown. So we typically get to see between 50 and 100 space-related investment opportunities every single month, representing more than 75% of the global deal flow. And the ability to be able to see so many of these businesses, they're all private businesses, and when they approach us, they provide us with all the information we need to know about their business, including who are their customers, what's their pipeline look like, what their valuation is, everything that we need to know. So within any subcategory of the market, we get to see 10, 20, 50 companies that are all looking to do the same thing. Mm. And when you've got all of the information across all of those companies, identifying which is the best one is actually relatively straightforward.
Yeah.
So we use this information asymmetry to help us make the right investments. But what we have, and you alluded to it in your question, is we've developed an accelerator for space. So previously, we were receiving such a large deal flow that I was having to say no to 99.9% of all of the entrepreneurs that approached me, even those that I thought were really good, with a really good idea, with a great market that they were looking to address. So we created something called the Seraphim Space Accelerator program so that we could say yes to more promising companies. So what we do is, through our global deal flow, we identify the seed stage companies that we're interested in, and then we invite 6 to 10 of them to participate in a 3-month program. And during that 3-month program, we introduce them to all of our corporate partners, and we also then help them get investment ready. We help them with their go-to-market strategy, their articulation of their proposition in the language of investors.
Yeah.
And we then introduce them to 350 of our VC friends from around the world, who then all syndicate and invest into those companies. So we have been doing that now for, we've now done 11 cohorts, each with 6 to 10 companies on. And then we've also then expanded into the US. So we were originally doing this from the UK globally. We now operate in the US as well, in San Francisco, from London for Europe. We've just opened up an office in Singapore to do Asia ex-China. And each of those platforms has 6 to 10 companies twice a year. So that's 40 to 60 companies that are all seed stage that go through that investment process. They get invested in by other investors, but we at Seraphim, we get an option, a 2-year option, to invest into any of those businesses within that 2-year period after they've graduated from the accelerator. So what that allows us to be able to do is to monitor these companies after they've been funded, technically and commercially, to understand how they're progressing, to determine whether this is a team that we actually want to work with, and then we take up our option, we invest into the businesses. So it's effectively like a large due diligence platform where we're helping to grow the ecosystem, but we've got optionality to invest into businesses where we grow conviction. So a reasonable number of the companies that are in today's investment trust were originally born out of that process.
Excellent. And what, when you're doing your sort of due diligence, so you get this deal flow coming through, you can highlight quickly, these look like the winners. What are the characteristics that you're typically looking for when you're doing your due diligence on a potential?
Well, that's really easy, because it's all about people.
Right.
It's about the people that we are looking to back. So, are they the type of people that are capable of building an incredible team and maintaining that team? So hiring the right people and maintaining them. Are they capable of raising money from other investors, convincing them of their vision? Are they capable of putting the processes in place to actually execute against their plan and scale that up? So being a venture investor, a lot of our experience is around pattern recognition. What does a good entrepreneur look like? What do they say to you when they walk in the room? How do they answer questions about their competitors? So we've got a really good understanding of what good looks like in relation to entrepreneurs. So that's really where we focus the vast majority of our time, around trying to find people that we believe in. We want to back their vision. The team that they've built around them is great. They've already got some good investors around them. So the second thing that we then look at is the addressable market. what is it that they're seeking to do.
Yeah.
So we've got this great vision over the global market because of all of these companies that are approaching us. So we understand how they fit into the market competitively and how that market is going to be developing over time. So we'll often get third-party experts to help us independently build a view of what the addressable market size is, how far out that market is. So we've got an independent point of view on the market. The management team have obviously got their own point of view that they include with the materials that they provide. And we at Seraphim have also got our own point of view as to how that market's going to develop. So this is a really important part of what we're doing, because we're always looking into the future, but we don't want to look too far into the future. So for example, the kind of companies that we're investing into at the moment aren't the companies that are involved with all of the activities around the moon. There's a huge cislunar economy where NASA is putting man and woman back onto the moon in the next 2-3 years.
Yeah.
There's a massive amount of investment going on there, but that's not coming from us because that opportunity is way too far out in the future. And there's actually a huge amount of opportunities right now that are for companies that can quickly generate revenues, grow very, very quickly and build sustainable large businesses. So this is part of the thing about making sure that we're investing into the right part of the market that works within the timeframes that we're interested in. And then right down at the bottom of the list is really the technology. And we use our network, and then we use our partners, and sometimes we use third parties to help us evaluate the technologies. But it's not really, even though people think space is very much about the technology, it's still about the people, it's about the market, it's about the timing. You don't necessarily have to have the better mousetrap, but if you've got the second best mousetrap and you've got everything else that's in place, you're still more likely to win out.
Yeah.
So that's what we're trying to do.
Okay, and the trust was floated in 2021.
Yes.
You've been deploying cash since then.
Correct.
As we went into the start of this year, actually quite a lot of the sort of VC and growth equity funds started moving into capital preservation mode. What's your approach currently?
Yeah, so the first thing to do when the economic clouds were growing above us was to make sure that the existing portfolio is in good shape.
Yeah.
And that's really very much where we've spent our time during the course of the last year. Companies are now very well capitalised. So we only have one of our companies that isn't financed into next year.
Mm-hmm.
And actually that's closing its funding round today.
Okay.
So we've got our companies that are now very well positioned for the year ahead. So what that's enabled us to then do is to look at the cash that we've got left, and we've got £35 million pounds currently, and then we've allocated that across the portfolio. So looking at the portfolio, identifying which portfolio companies are going to be raising money in the next 12, 18, 24 months, and then we've allocated capital against those that actually require us to participate. And then this that has actually allowed some capital to be left over. So we're still making small investments into new companies. Now, right now, at the bottom of the economic cycle is actually the best time to be making new investments.
Yeah.
So we're writing relatively small checks into really exciting businesses that we think in 1 or 2 years' time could be companies that the trust might want to invest a B round or a C round into and help those businesses to scale. So as you correctly say, capital preservation, most of the money going to support the portfolio, and then a small amount of the money to continue to invest in the great deals that are available to us right now. So it's effectively taking positions for the future. It's probably also just worth talking about valuations,
Mm-hmm.
because the market, and if you look at the discounts that we're suffering at the moment between our NAV and our share price, it suggests that the market is concerned about valuations. And this is really not the case in the space market. And in fact, broadly across the whole venture market, valuations have been sustained at a reasonable level.
Yeah.
Across our portfolio, during the course of the last 12 months, more than 60% of the companies that we have invested, or the portfolio companies that have raised money, have done so on a valuation that's an increase on the valuation in their last round. We only have one company that has done a fundraising on a downed round, and the rest have been flat.
Okay.
So that really demonstrates to me that the space market is a market that's still able to access capital from external investors, and these external investors are coming in knowing the market environment and are still pricing these businesses attractively. And they're doing that because the underlying businesses are performing well. They're growing their revenues. They're hitting technology milestones. They're hiring people. These businesses are growing because defence and climate are the two drivers behind, the main drivers behind all of these businesses.
Yeah, and I think I want to try and understand that a little bit better. I mean, we're in an environment where, clearly we're looking at a cyclical downturn and interest rates returning to what we'd call normalised levels. It sounds like you've got a set of companies where actually the secular growth story seems to ride through that, and that you should continue seeing that performance coming through.
That's certainly what is happening currently in the portfolio. These companies are doing new incredible things that have never been done before. Providing new data sets, applying artificial intelligence across these data sets to provide valuable insights to defence, valuable insights to insurance, and those that are focused around climate. This data is not replacing something else. It simply wasn't available before. And now that it's available, people want to buy it. So the fact that we're in an inflationary environment, the fact that interest rates have gone up, doesn't mean that the defence community doesn't want to buy the best kind of capability that's available in the market. Part of the issue here is because this capability is available commercially in the market, there's a real imperative for all defence companies, all government defence organisations, to buy whatever the best in class available in the market is, because if they don't have that, they are automatically inferior in capability to their adversaries. So this is the reason why there's such a huge demand at the moment for the type of capabilities that our companies are providing. That's the defence side, and it's very similar in the climate side. Every single month the newspapers are just full of the fires, the floods, the tornadoes that are getting worse, and the world has got to deal with them. And the types of companies that we're investing into provide the data that helps us better manage this, predict them better, to deal with the aftermath, to help the companies recover, and to audit everything that's going on so that everything's done fairly. So that's not going to stop because the economic environment has turned down, or because interest rates have gone up. This is data and capability that the world requires, and they're buying it significantly. And this is why the portfolio companies are performing well, and it's the reason why valuations are holding up.
So and now I have you. I mean, I hear a lot of managers coming on talking about really interesting companies. I think you've got the trump card here. And I've heard, as you read about the sector, you hear about these sort of weird and wacky applications. So the idea that you can put a data center in space so that all the carbon is actually in space, not
got one of those already.
The idea that you can generate solar power effectively in space and channel it back.
Got one of those already.
Yeah, exactly. So, I mean, these are sort of fascinating applications as you start to. So, what are your sort of personal favourites of those sort of weird and unusual companies that you come across?
Well, so there's two that I would mention. So the first one you've called out there, which is solar farms in space. So this is about building solar farms in space to take energy from the sun to provide clean energy to planet Earth. So this is game changing. Currently the world is reliant on black things that we dig out of the ground, and it's just not sustainable. So I believe that this is a potential answer for the future. There are 5 companies around the world that have established themselves to address this. We've evaluated those companies, we've identified the one that we think is the best one, which happens to be a team that have spun out of SpaceX, and we're backing them. So that's currently in our accelerator. It's not yet in the investment trust. The other area that we're really interested in is biopharma in space. So under zero-G environment, all medical experiments behave differently. Molecules behave differently in space. So we've been looking at the entire market to determine how we can invest into this area. So through the trust, we've already invested into a space platform that is effectively a science park in space in order to be able to do drug development. We're then also investing into the companies themselves that are looking to do the drug development on behalf of the pharmaceutical companies. So they provide an automated platform to be able to provide this drug discovery for the market. So they actually take that into space, it's all automated, they then bring down the results. And then we've also then started to look to invest, and we have made our first investment into the companies that then bring the manufactured goods back down to Earth. So there needs to be a supply chain that when the goods are manufactured in space, that these goods are then brought down regularly and at low cost. So that's an area that we've just invested into as well. So we see this whole area and all of the parts of the supply chain as a massive growth area. We think that there's going to be some game-changing results that are going to come through biopharma in space in the near future.
Yeah.
So investing into each of the parts of the ecosystem is how we're looking to play that market.
Fascinating. Now, a large part of why we do this is for education. Lots of people look at these programs for their own education. And so I think the final thing I'd ask you for is some kind of recommendation from you in terms of an inspirational book or a documentary you might recommend for anyone who's interested in the business of space.
Yeah. So in relation to the book, I would recommend Space Barons. So it's a little bit cliched because it's about Elon Musk and Jeff Bezos. But what it really does is it helps you understand their vision for why that they've created these launch capability to open up space to humanity.
Yeah.
It's a fantastic read that really opens up your mind as to what a lower cost access to space is going to enable in the years ahead. So that's by, I think it's Christian Davenport. So that's definitely recommended reading. In terms of documentary, my absolute favourite is a Richard Branson one.
Okay.
It's on Sky at the moment, and the chairman of Seraphim Space Investment Trust, Will Whitehorn, narrates this 4-part documentary. He's the ex-president of Virgin Galactic, and has obviously worked with Richard for many years. And it's spread over 4 parts, but the space element is really critical to the Virgin organisation, and increasingly so in recent years. And the way it all plays out makes for fantastic viewing. So that's my recommendation around documentaries.
Very good. My summer reading set for me and summer watching set for me. Mark, it's been a pleasure talking to you and learning about space with you. I hope you all enjoyed that, something slightly different to what we normally have on. As usual, if there's anything else that you'd like us to bring onto the show, please let me know. But thank you very much for joining Vantage once more.